The Internal Revenue Service, IRS, is set to lay off over 6,000 employees by the week's end, marking a significant workforce reduction at a crucial time for taxpayers. This decision, reportedly part of a broader initiative by the Trump administration, could impact the agency's ability to manage the ongoing tax season efficiently. According to U.S. media reports, nearly half of these layoffs will affect the Small Business Self-Employed Division, a crucial department that assists independent workers and entrepreneurs with tax compliance. An internal email obtained by CBS News, signed by SBSE officials, stated that the positions being eliminated were deemed non-essential for tax season operations. The email, reportedly authored by SBSE Commissioner Leah Colbert and Deputy Commissioner Maha Williams, indicated that more than 3,500 probationary employees would be let go before the week's conclusion. Those affected, primarily new hires with less than a year at the agency, are not eligible for severance packages, compounding the uncertainty for those losing their jobs. As of the 2023 fiscal year, the IRS employed approximately 83,000 workers. The agency had received an $80 billion funding boost during the previous Biden administration, aimed at improving auditing, enforcement, and investigative capabilities. However, congressional Republicans, long critical of IRS expansion, successfully scaled back those investments. The Trump administration, in conjunction with Elon Musk's Department of Government Efficiency, DOGE, has positioned these cuts as part of a broader initiative to downsize the federal workforce. This move aligns with efforts to streamline government operations, with some officials even considering dismantling certain agencies entirely. While proponents argue the cuts will curb bureaucratic inefficiency, critics warn they may disrupt essential services. Many of these administrative overhauls face legal challenges, leading to an uncertain landscape for federal employees. The long-term consequences for taxpayers, particularly small business owners who rely on IRS support, remain unclear. Commerce Secretary Howard Lutnick, in a recent Fox News interview, reinforced the administration's stance, stating that President Trump's ultimate goal is to eliminate the IRS and shift revenue collection to external sources. He floated the idea of an external revenue service, which would rely on tariffs instead of traditional taxation methods. Public reaction to these sweeping changes appears divided. A Washington Post Ipsos poll suggests that while 44% of Americans approve of Trump's handling of the federal government, 54% disapprove. Independent voters, a crucial demographic, largely view these efforts skeptically, with 60% believing the president has exceeded his authority. As the tax season continues, the impact of these layoffs on everyday Americans remains to be seen.